morning, everyone, and welcome to the PivotBoss pre-market video for Monday, November 24th, 2025. I am Frank Ochoa, aka PivotBoss. Happy Monday, everyone. Here's a look at the ES in the daily time frame. Right now, a narrow range heading into the RTH open. A ton of volatility over the last 5 and 10 day splits here. You can see currently only trading 44.5 points of range, which is 37% of ADR. But right now, we see that we have had well over 100 points on average over the last 5 and 10 day splits. So this has been a big volatile period of time, increasing volatility throughout the month of November. And that coincided, of course, with weakness, which tends to be the case. We have hit the key range low here in the ES, and that offers an opportunity to bring it back toward the mid on a good rejection, and it ended being a good rejection on Friday. This is going to be interesting to see, even if we get that bounce, even if we get a decent bounce, is this bounce going to be followed by another lower high up ahead? So this is going to be something to keep an eye on. While this is a holiday shortened week, we do have a ton on the economic calendar, including core retail sales, PPI, ADP employment change weekly here. We have, let's see, GDP, core PCE price index. So a ton of economic data points on a Tuesday, Wednesday. Monday could be a bit more back and forth, range bound, finally finding the early boundaries for the week with an upward bias at the moment off of Friday's low, and 6,600 continues to be the major market structure level to watch. Again, that was a massive failure on Thursday. It was hard to call that a transition day just yet. It could have turned into a transition through 6,600, but of course we know we have this key level here. So right now, barely hanging on, and this hanging on right here by a thread can still provide a late year rally. But we fail on this attempt, and it could be Dunsky here for this market, and we're rotating back down on a December for a second kind of lower high inverted check mark month. You know, after this inverted month, we may start December that way and have back-to-back months of weakness if we don't get off the mat here. So very important pivot extreme right here, market structure edge for the ES. If we look at the NQ, similar deal here, big time selling pressure. Look at that Thursday move. Here's your key range low right there, held it. This is your market structure edge, 24,500 at it right now. Still lower highs and downtrending here. A wider pullback than we've seen in a long while. Is that going to provide an opportunity to bounce this thing back toward recent highs and that FOMC key level? Or is any bounce going to be met with another round of selling pressure? Because the next, if this fails, the next rotation down likely is more violent, more aggressive, and is a quicker path back to kind of a mean reversion trade back to the 200-day and yearly VWAP. So are we going to complete the reversion back toward the mean? That next, if this fails here, we're likely on a path back to VWAP down below. 22,500 and thereabouts would be that target. All right, looking at crude oil. This one continues to be like this, downward sloping range between these two gray levels. Those two gray levels is the middle 50% between the two extremes here on that impulse rally. And that tends to be the case after you get a big impulse move. You pull back, you can tend to be between that middle extremes for a little while, building energy. Eventually, we see that energy come out, and it can tend to be, say, down first and then up big, especially if it coincides with market structure. A lower low failure could be tremendous. I know I've mentioned this before here, but as of right now, we continue to see just this back and forth action. So to start the week here, it wouldn't be surprising if we make a little bit of a move up and continue to be in here. At some point here, if we do get one more flush, it could be the last one of the year, because we tend to see a seasonal bullish rotation starting mid or early December. All right, looking at gold futures right now, down marginally here. I've mentioned before, so much movement in gold. I mean, look at this chart going back, that right now it's taking a breather. And that's okay. That's a very narrow range. It's range bound right now. This could be a great time to sell some premium here as this thing just kind of quietly goes sideways At some point here, we likely see another major rotation. But this sideways pattern could last several months. It could literally be 2, 3, 4, or 5 months. That's what it did last time. After a big move up, this was 4 to 5 months sideways before the next rotation. So we're right at the beginning of that. Even if it's another 2 months, I mean, this thing could easily just sit between these boundaries back and forth. So the best opportunities on a swing basis are at an edge, back up, or at an edge, back down. Still a bullish bias overall. And of course, right now, super compressed range. So got to let it just continue to build out at these highs. At some point, we get a transition to another markup phase in all likelihood, until proven otherwise. All right, looking at Bitcoin right now. No, let's go to YM. The YM here is up marginally at the moment. This one did not fall as much as that recent Friday key range low. That right now is a higher low off that level as this thing continues to trend up. A bit of an expanding range, but didn't quite get this low right here. Can this market recover a bit to the upside, or is this going to fail for the first time? So right now we do have that lower trend line that's been in effect here. Nice upward trending market here. At this edge, this would tend to be the spot where you tend to get that great rotation to a new high. Finish the year on strength. But this is also the spot where if that does not play out and you fail, you're now breaking major market structure, major trend break, and now it's a full-on reversion to the mean back toward yearly VWAP in the 200-day moving average and the next lowest market structure level, which would be around 43K. So how low do we go, or is this about it? This is going to be an important zone here for this market. 47K, still below that level. If we come into that zone and still can't get above it, 45 is still below. All right, looking at Bitcoin here. Bitcoin up nearly 2% right now, gapping up Sunday evening, but filling back into the gap. One thing about Bitcoin right here is that it is in free fall. It had the first mini flash crash here on Friday. And when you get the first one, you tend to get the second or third before this thing is over. After that flash crash, we did not quite see a responsive bounce. We didn't get any kind of reaction or rejection. We got a small one, but that tends to happen after a flash. We're not getting the type of reaction off the lows that you'd like to see. Instead, this is an aggressive liquidation to the downside. And while we had 80K as an early target, we still have 75. And if 75 doesn't hold, 50 is down below. This could get much worse before it gets better. And even if we get a bounce toward 95 to 100K, it could still be sold for another rotation down. Got to be careful with Bitcoin right now. We've called the tops near 125. And again, we haven't seen that type of responsive move that we'd like to see off the lows. Instead, maybe this 80K is an early low, and then we get a lower low down the way that could be a lower low failure. That could provide an opportunity. Right now, got to be cautious. Looking at Ethereum. Ethereum right now is in the same boat. This thing, we called these highs up here above 47. Now we've seen a steady downtrend ever since. We've hit lows on Friday of 2,600, and now that we're failing through 2,900, 2,150 is very real. 2,000 could be in play, and if you're breaking through 2,000 here, you're making a run all the way back to 1,400. Now this is nothing new here for Ethereum. It tends to have those major rotations. We've called it each and every time here off the highs that there's a very real possibility to get to the other side. And here we are again. There's a very real possibility to get to the other side. So you really have to let this thing flush out before making that next major entry. 2,900 is the current near-term level here on a market structure basis, but we could bounce and still fail even lower. So got to see where this thing bottoms out. Again, to fail through yearly VWAP, that opens the potential for a push into 3 standard deviations below value up ahead on a yearly basis. That's still below 2,000. That would be where a value is to return it back up to VWAP. So right now, Got to let this thing flush out. All right, that is it for now. We'll see how this plays out here heading into the holiday shortened week. Everyone have a fantastic rest of your day. I'll see you in the trading room. Take care.